Nothing in this podcast is intended as investment advice, and the people in this podcast may hold positions in the stocks they talk about. Do not buy any investment based solely on a tip or recommendation. Please do your own research.
Hello and welcome to the Midweek Takeaway. Today we're joined by Pieter Krügel, CEO of Mast Energy Developments. Welcome back, Peter.
Hi, Phil. Hi, Kevin. Good to be back.
Absolutely, yeah. So we just seen the news that the company's announced a 16% revenue increase for July 2024 from its Pyebridge 8.1 megawatt flexible power generation site, totaling approximately £66,000 after receiving embedded benefits. Preliminary revenue for August 2024 is around £46,000, though embedded benefits are yet to be included. Pyebridge's market outperformance reached 75%, with gross profit margin improving to 57%, with an electricity sales price of £106 per megawatt hour versus a market average of £60. The second genset refurbishment is progressing on schedule, with a maximum 8.1 megawatt capacity contract application planned for September. MED's funding partnership with RiverFort is helping drive these developments, with the company expecting higher revenues in the September and October shoulder months and aiming for 100 megawatts of green energy capacity in the future. Sounds like real progress, Peter.
Yes, thank you, Phil. That's all 100% correct. So following the successful refurbishment of our first 2.7 megawatt genset on the Pyebridge site recently, that was completed within budget and within timeline, we now have 2 full months of trading performance from that genset. As you said, I've seen a 16% improvement in our preliminary revenue for July because of the addition of the embedded benefits. Just for interest's sake, what are embedded benefits and why is it only received a month in arrears? So embedded benefits is additional revenue that we receive for being connected straight into the distribution system as opposed to being connected to the transmission system. So the National Grid pays us that additional revenue because it's a cost saved on their side. And it's usually around 16% per month, give or take, of additional revenue that we receive. So that bumps up the July total revenue that we've received. We're looking at preliminary revenue for August of 46,000 before embedded benefits. And, notwithstanding August being a month of less than usual demand for us because of high wind generation, but that will be offset with September and October shoulder months, as you already said, which is typically our highest generation months in the second part of the year. Another very big milestone for us is the improvement of the gross profit margin that has now gone up to 57%, which is excellent, and ongoing outperformance of the market price as well. So based on the first refurbished gensets, the numbers are solid. It's establishing a framework for us now that we can reliably model out and see what the future looks like as we grow our megawatts in production, starting with the second 2.7 megawatt genset that's currently being refurbished, and that's on track and on schedule, and then the third, and then further start from there, etc.
So, Peter, this looks like consistent progress. Has there been any downtime on this new genset that's been put in?
No whatsoever. 100% reliability, 100% availability, which is exactly what we expected post the overhaul, and that's been the case ever since.
Yeah, I mean, I would have normally anticipated, Peter, that the shoulder months would have been some period for downtime, but I guess because you've recently had them overhauled, you know that you can go full power forward through those shoulder months.
Yes, that's a good point, Phil. And the shoulder months are typically for baseload generators, so generators that generate 24/7, which we're not. So we're flexible generators, we're modular, we are small scale. So our maintenance are done within hours throughout the year, and typically when we don't generate. So from that perspective, from a generation perspective, we don't have any downtime, and we can then generate whilst baseload generators are down during September and October and March and April each year.
So when do you anticipate that the second genset will be ready to rock and roll?
The progress is going according to schedule. So we've already done sufficient work on that genset in order to have passed the satisfactory performance days, or the SPDs, that's required to submit our next capacity market contract application. That application window closes at the end of September. So we've already proven that we can generate 8.1 megawatts of capacity. So we're ready to submit that application by the end of September and get that full maximum capacity contract for the next delivery year.
But the actual physical second genset, when do you expect it to be up and running?
Up and running likely at the end of October, going into November, fully completed, which is kind of in line with the timeline of the first one. It does take 8 to 10 weeks to fully complete the entire process.
And in terms of the RNS, you stated in the RNS there that you were looking at operational per profit megawatt of circa £73,000 per annum, I presume that was, and you're confident you can improve that. So that's going to leave you in what sort of position once you get to that point?
Yeah, so we've touched on that previously, Kevin. So that number is the annualized operational profit per megawatt. So per annum, as you said. So if we apply that to Pyebridge or a similar site, and as I said, we've talked about this before, we're looking at around £600,000 of free cash flow. And we said that, at a group level, we need one further site for MED at PLC level to be cash flow positive. And that's the big attraction of our strategy, is with each additional megawatt that we put into production, we not only improve the free cash flow to MED, but we also benefit from economies of scale because of purchasing power and such. So the strategy is very much, we've got a proven pilot site now with Pyebridge that we can prove works from an economics perspective. We've shown that we can get project financing at the SPV level, to acquire, develop, and operate these sites. And we are now going to replicate that across the portfolio, and in order to increase the megawatts in production.
How do you see the electric price affecting your overall profitability?
Interestingly, we generate our gross profit from electricity price volatility, whether it goes up or it goes down. So we want electricity price volatility. I think our market outperformance shows that it's an integral part of our economics. So, the average electricity price during August was £60, and we sold at £106. So we typically sell when the electricity price is at intraday highs in order to generate our gross profit. So we won't generate and trade our electricity at a PPA level if there's not a positive gross profit margin.
Okay. So we're looking forward then just to this happening, but how do you see Mast moving forward? Obviously, you said to get to a cash flow positive point of view, you need to have more sites. So how do you see that happening?
Yes, we need to grow the number of megawatts in production as quickly as possible. So one further site similar to Pyebridge will get that done. And that is very much our strategy at the moment. So we're looking at a pipeline of further sites to either develop or acquire. The preferred route at this stage is to, for the next few steps at least, is to acquire existing sites that's already in production that requires limited overall work, similar to Pyebridge, which will have two main benefits. Firstly, it will come at a reduced cost and a quicker timeline to revenue generation compared to new build sites. So we've got a firm pipeline of such sites available, which we're assessing at the moment. And the plan is very much to take that next step as soon as possible.
Okay. Well, we look forward to hearing what's happening over the coming months. Obviously, be interesting to see what the production is going to be in September as well, to see, a full quarter. And yeah, we're definitely on steadier ground now, and I think you'll agree that yourself. And hopefully this allows you to move forward from a position of strength.
Yeah, and if anyone's interested, there's some good pictures on the med.energy website of the old removal of the old engine going for overhaul, etc., to Koopostelen. So you can have a look on that. I think that's detailed in the RNS as well, so people can check the progress at site.
That's right.
Okay, well, on that note, we'll say Pieter Krügel, CEO of Mast Energy Developments. Thanks very much for your time.
Thank you, Kevin. Thank you, Phil.
This podcast was brought to you by Roast PR Limited. If you would like to appear on a future episode of The Sunday Roast, please email admin@thesundayroast.net.